Hey, you probably hear this all the time. BYOB, yep, bring your own, no, become your own bank, take back control of your money, do what the banks do. Well, let's dive into this and show you how the banks do this step by step. Oh no, it's very simple. You might think it's complicated, but very simple. It involves changing just one thing. And when you change that one thing, you're doing what the wealthiest families have done. The Rothschilds, the Morgans, the Stanleys, the Barclays, the Walt Disneys, the Ray Krocs, and even our sitting president, Joe Biden. Seriously, they all use what I'm about to dive into. We're just going to do this with a little bit of a twist. So let's jump in. Thanks again for being here. I'm Jason Sipple, Founding Fathers. If you're new here, go ahead and smash the subscribe button, hit that like button, and ring the little bell to be alerted for all new content. Answer this question. When you get paid, first of all, how's it feel? Are you pretty excited? A little bit of celebration when you get paid, we see the money in our account, and then it goes out again. So where does that money go first? It goes to the banks. Now when we deposit our money to the banks, we're giving up our hard-earned money, and the banks are taking our money and they're making money. They're making money on our money. All of the deposits we put there. Now we're storing it there and we really think the money's there. Let's just talk about this. Is our money really sitting in the bank? Like if you went back to your lockbox and opened it up, it would be empty. As soon as we make a deposit, the bank is taking your money and they're going out and making a spread. That's where all of the people in the cubicles in the bank in the nicest avenue, the main street in your town or your city, and that's why there's more than one, is because all of those people in those cubicles, all the loan officers are taking our money and they're making more money with our money by making loans. So our money that we've earned is now making the bank a lot of money, right? And let's talk about how the bank uses our money to make more money. So it's this, the wealthiest people understand that we are either making interest or we are earning interest. And so now let's pretend when we put all of our hard-earned money from all the things we do, because remember there's two businesses, two businesses we all need to be in, and the first one's what? The first one is the art of making money, of creating more value, of solving more people's problems. And when you get really good at that, then we want to have the second business, which is putting on our banking hat and understanding how did the banks, how did the richest institutions really leverage and create leverage with our money. And so they're going to take our hard-earned dollars, like I've said a couple times, they're going to lend it out to somebody else, and that someone else is going to pay them a bigger spread. So let's just imagine that the bank is paying us 1% on our money, and the banks go out and they lend it to somebody. They go lend it to, let's say, Blake at 6%. Well, now Blake has the money, right? And he's putting the money back in the bank. Now the bank is making that 6 minus 1 spread. That's a 5% spread. And they do that over and over and over again. That's our car loans, our boat loans, our house loans, our mortgages, all sorts of things. Credit consolidation, home improvements, pool loans, right? We live here in Florida. I live in Florida, so pool loans. And they're not just taking the money out, but they're really interested in the spread. And so when we do the math on the spread, like the 6 minus 1 is 5. Well, it's not really 5%. They're making hundreds of percent because they're moving the money over and over and over and over again. And we have a much deeper presentation that goes into the mathematics fully, but if you want to Google this, look it up. The banks are making between 400 and 1,300% annually. Imagine making 400% on your money or 1,300% on your money annually. That would be amazing. So wouldn't you want to know how you can become your own bank? Wouldn't you want to know how to make the spread the banks are doing? And so when the banks are moving that money, you can look this up on BauerFinancial.com. Go look it up, go look at your local bank that you bank out, and you can go look and see how much of a spread they're making. And if you see that they're making less, please let me know. I've looked into all the banks I bank with, Bank of America, into the credit union I used to use to buy my truck, And they're all making that spread. Go check it out. It's kind of fun. And if you see something different, I want you to let me know. Let's talk about some of the benefits of being our own bank. Okay, let's talk about some of the benefits that we would want to have if we had the perfect banking system. Would you guys all want to have guaranteed interest? You know, the banks you're putting your money in now, they might be paying you 0.07%, or maybe they're generous and they're giving you a little higher in a high yield savings account. But is it guaranteed? Is that money guaranteed? Throw a yes or no in the chat and let me know. Is the money that's earning you interest in the bank guaranteed? And your bank, and your conventional bank where your money is sitting today? The answer is no, it's not guaranteed. So would you want a vehicle? Would you want a vehicle where your money is earning you guaranteed interest? And the guaranteed interest is going to be somewhere between 2% and 3.75% contractually guaranteed for the rest of your life. Okay, that's number one. So we're going to have guaranteed interest. What's something else that you'd like to see in your bank? Would you like your bank to have the money in there growing where it is tax-free? Where it's tax-free growth, it's tax-free distribution, it's tax-free loans. Would that be something that you guys would want? Right? You want tax-free. So what else would we want in our bank? We want it to be when we get to the end of the year and our company in that relationship is profitable, well, we're going to get dividends. Well, that sounds nice. So instead of making that 2 to 3.75%, we're going to earn 5 to 6.25%, and we might pick up some tailwind. I don't know that for sure, but that's been kind of the word and some of the letters we receive. But so then we're going to earn a dividend on the money. And then, you know, let's say we're a business owner or we're a real estate investor. Wouldn't we want our money to be protected against liens and judgment in case someone gets sue happy, in case someone gets hurt on our property, in case someone gets hurt in our business? Yes, it's another thing we want. How about having the money in a stable environment? How about having the money somewhere that's older than our tax code, that's older than any of our government retirement plans, someplace that's 200 years old and practices a different economy, Austrian economics, than what we're doing with fractional reserve lending. We want it in a stable environment, not what we saw last year where the banks are failing and someone makes a run in the bank. And I already told you there's no actual money in the bank. When you go look in the bank, there'll be, if someone put $1 million in, there might be 1/10 of that at the most in the actual bank, or even less. So we want our money in some place that's stable, right? And then what if you had your money and something, God forbid, happens and you're no longer here? You've graduated, you've shuffled off, you've passed on, you've passed away. Wouldn't you want your family to be taken care of? So let's say you had $10,000 in your bank, you pass away, now your family members, the people you love, the things you love, are getting a 10x return. They're getting somewhere between, they're getting $100,000 of a 10. If you have $100,000 in your banking system, they're getting $1 million. And that is tax-free, guaranteed estate. It doesn't go through probate. So all of this sounds pretty good so far, right? This sounds better than having your money stored in a conventional bank where someone else is making the spread. Remember, we're talking about becoming our own bank. Now, what if we knew that all of the money in our banking system, not only is it earning that, 5 to 6% annually with that dividend year over year, but what if we knew that that money was compounding, right? What if we knew that that money year over year was compounding uninterrupted interest, and we could use the money that we're saving to go out and do something else with it? We could go pay off some debts. We could go buy a new car, that red shiny car that you've always wanted. Or maybe you're putting it into an investment where you're making a spread on the money, like the banks are doing, and now you have money coming back to you. Wouldn't it be awesome if you could do all these things and then you knew that that money that you've borrowed against your cash value was still growing uninterrupted? If you had $100,000 in your banking system and you borrowed out 90% of it, but that money was still earning you a guaranteed, uninterrupted compounding interest, who was it that said that that was the eighth wonder of the world? It's a pretty smart guy. He's in New Jersey, like this other guy here that's talking to you today, my old stomping grounds. I think it was, What was his name? Was it Edison? No, it wasn't Edison. Was it Roosevelt? No. Oh, it's that Einstein guy. It was that Einstein guy. Einstein said that uninterrupted compounding interest was the 8th wonder of the world. Now think about this. I know an individual that has a policy that's 15 years old, and for every dollar he's putting into that thing, he's getting $2.55 back immediately. That's a 255% return. I have another guy that I just spent some time with in California that every dollar he's putting into his machine that's 15, 16 years old, he's getting $4 back. That's the power of uninterrupted compounding interest. Okay? And now when I reveal this, now most of you guys are already in the know that are here. Maybe some of you are new, but I see a lot of familiar names. So you've already heard this. So when I reveal the magic behind this machine, I don't want anybody turning around and running for the door and screaming, no! Right? All this is specifically engineered, cash-rich, whole life that is designed through a mutually owned, dividend-paying whole life company. Why whole life, Jason? Well, show me a better machine. If you guys, please message me, call me, email me, comment here if you know a better machine, 'cause I want to know what it is. You know, I've been doing this for a while now. Our team's been doing this for decades. You know, I know people doing this for 43 years. Show me a better machine than the one I just talked to you about. And this is when people think, well, wait a minute, it can't be this, because that's just too good to be true. That sounds like we're eating our cake and we're eating it too. We have our money growing in a guaranteed contractual rate. We have it earning dividends for the last 147 years consecutively. We have it protected against liens and judgment. We have it growing tax-free. We have access to the money. I didn't even mention that part. We have access to the money. We don't have to jump through hoops. I'm getting a first lien HELOC right now to my home, and the hoops are crazy how many hoops you have to jump through. You have to have your credit score has to be the middle of the 3, and it has to be a certain number, and all the other things that go into it. There's no hoops. It's just like, hey, I need a loan. Okay, cool. Do you want the max amount or a portion of it? Like, how much of the cash value you have available would you like to borrow? They never say for what. They don't care. It doesn't matter. And then you also have, there's the stability of the environment and everything else. Like I said, it really feels like we have our cake and we're getting to eat it too. But that is what we're talking about. We're talking about something that the wealthiest families have done for centuries by just changing that one thing. We always talk about, let's keep it simple. We're keeping it simple as simple. This is why I'm giving you a high level today. And what are some of the common misconceptions that we have around whole life? Well, a couple of them, right? A couple of the common misconceptions are, you've seen some really, well, I won't call them really smart, but we'll call them pretty smart. We've seen people out there just saying, whole life, oh no you didn't, that's the worst thing ever. I mean, we see Dave Ramsey or Susie Orman who have done amazing things. They've taught so many people discipline. There is no one practicing infinite banking without having mastered the pain of discipline. You've heard me talk about it all the time. There's 2 pains in life, right? What are the 2 pains? If you guys know, pop them in the chat. What are the 2 pains? It's not, Blake, just so you know, it's not marriage and it's not taxes. They're painful, but the 2 big pains in life are either the pain of regret or the pain of discipline. So what Dave teaches us, what Susie teaches us, is we have to have discipline. We have to live within our means. We must delay gratification. All these things are true, and you know why? So they're right. They are completely right when it comes to that, because that delayed gratification, that thinking long term, we don't want to just think about ourselves today. We don't want to just think about ourselves tomorrow or the next day. Yes, we're living 2 lives. We're ourselves presently and our future selves simultaneously. What? That's wild. It's a little weird. So right now, rather than it being, over a dozen of us on here, there's actually 26, 27, 28 of us hanging out together right now, doing this together, because there's 2 of us, and there's many more of us because we also want to be the earner, the banker, right? So The notion that we want to buy term and invest the difference, we're going to have a factual breakdown of that and show you why it's nonsense. Because it doesn't take into account thinking long term, creating generational wealth. We want to have our money, remember you've said already that you love to have all of those things that I mentioned that could happen in your banking system, in your specifically designed, cash-rich, whole life system. Don't let other people get in your head and tell you it's too good to be true. I want you to take back control. I want you to do the research to really dig into this, because everyone I speak with, everyone who's done this, myself included, we go down a rabbit hole together. And that rabbit hole takes us down some pretty cool places where we learn what's really happening with money, what's really happening with fractional banking, what's really happening with the Fed, how they're trying to have a soft land. Will they have a soft land? Will they not? You know what I say? I don't think it really matters if you're practicing infinite banking, because you're taking back control of your money, right? That's how I started this whole thing. Become your own bank. Take back control of your money. Stop paying interest to others and earn interest on your money. Recapture and recycle all of them debts and turn them into assets. And everyone's like, well, how? How do we do that? So it's just the math behind this. This is all math, but it's also the mindset. The math behind this is quite simple. When you borrow the money from your specifically designed whole life, you're not using your own money. You're borrowing against your money. The fancy word is collateralizing, right? You have your money in your left hand and you're going to borrow from the insurance company's general fund right here. So you have these two different buckets. You're borrowing against this one and you're going to borrow up to 90% of that money to put it to work. And that's actually coming from the insurance company's okay with that, because you're borrowing against that future guaranteed legacy piece, the death benefit. And you're just going to pay back the simple interest on the loans. Now, some people, it is true, you know, I've seen people talk about how you don't have to pay your system back, how you don't have to pay the loans back. And I would say I'd rather tell you, you have more flexibility on how you're going to pay the loans back. Is it true you don't have to pay them back? Yes. But guess what? If you're someone who's going to steal from yourself, I don't know if we're going to be good partners. If you're not going to treat your money better than you treat the bank's money and someone that you may or may not even know, the people that work at the bank, if you're always paying your mortgage on time, if you're always paying your car payment on time, your electricity, your other bills, your student loans, if you're paying those on time, why is it that we have such a hard time taking care of ourselves? Can I get some answers on that? Why is it so hard for us to really understand the first two commandments? And you guys know what the commandments are. The first one is love God, all your heart, your mind, and your soul. Heart, mind, and soul. Loving God, the Creator. Number two is love thyself. You put your hand on your heart. Love thyself like thy neighbor. That means God one, us two, you're number two, and then everyone else, number three. Why is it that when we get paid, everyone else's hands reach into our pocket, take all the money, and it goes psh, gone forever, like Cleveland said, gone forever, and we're not earning money on that money? Why aren't we running that through something that the wealthiest have been using? You know why? I'm gonna kind of let the secret, or the cat out of the bag, I think is the saying. It is fear. It's fear and uncertainty and doubt that this won't work. And so let's look at the simplicity of how this does work. Let's look at this, how all we're doing is we're following that first commandment. We're paying ourselves first. We're looking for financial leakage in our system. This is what I just talked to a gentleman a few minutes ago about, is really looking, okay, well, where are we putting our money? What's our money doing in this situation? Is there a way that we can downsize, right size, do something and have more cash flow? It's all about cash flow today. And then once that money's in there, we're going to borrow against it and we're going to take out a loan. And then we're going to pay back the loan with interest. So if we are borrowing at 5 or 6% from the insurance company, but the going rate of the car we just bought is 8 or 9%, what are you going to pay yourself back with? You're going to pay yourself back at the 8 to 9%. That is how you accelerate the growth in your policy. We're going to avoid, like we just said, we're not going to steal the peas. That's Nelson Nash. That is the one who brought Becoming Your Own Banker, and that book is here as well. If you guys don't have this book, Becoming Your Own Banker, every person should have this. I gave it to my nephew for high school graduation. The book not only shows you what mindset hurdles we're going to face, the 5 of them, but what actually happens in designing this for your future. Remember, thinking long term. Now I want you to imagine, I want you to visualize the banking circle. I want you to visualize having your money that you're depositing. Now that money goes around to the thing that you buy at the bottom, okay? And now once you've bought that thing, you, being an honest banker, are gonna, right? Imagine there's 2 of me here. I got a head here too. Comes down this circle. Jason, the purchaser, is gonna pay back Jason, the bank. It's one circle. And the money just goes around and around just like that. It is that simple. It is that simple. Yes, Cleveland, you can get Nelson Nash's book either from the Nelson Nash Institute if you want to support them, or just go directly to Amazon. That's where I actually ordered my original copy. Actually, my original copy came from my mentor, so that's not even true. I send it out all the time. But this one came from the Nelson Nash Institute, along with how privatized banking really works. And how do you guys set up your own bank, right? Well, the first thing is, like I said, you learn more. The first step in all of this is education, self-education, learning how to fish, learning how to put the bait on the hook, take the fish off the hook, maybe even cook the fish, depending on how deep you want to get into this. Or maybe you're just a fisherman for a day or a fisherwoman for a day, where you're going to go, they're going to bait your hook for you, cast it for you, hold your hand, do the whole thing. We can do that as well. But the first step is learning more, watching more content, learning more videos. The second one is once you've gone through the application process, you've been approved to be an owner in one of these mutually owned dividend paying whole life companies, well then what happens then? Well, we know that having a bank in place, becoming your own banker, is not actually the verb of banking. The verb, the actual banking, is action. We must take action. So to take action, what has to happen? Well, we want to make sure, we have the money multiplier, want to make sure that you have a professional handholder, someone that's going to come right up next to you, grab your hand and be like, I got you, I've done this before, let me show you how this is done. Let me show you how to read your dashboard with one of these A+ rated, mutually owned, dividend paying, whole life companies. Let me show you how to take out a loan, how to pay back a loan, any other changes, how to pay the interest, how to put more paid up additions in a policy, how to ask how much more you can put in, how to change a beneficiary, how to change ownership, anything that you could think of, they're going to be able to answer you the day-to-day practical aspect of using your policy. They're going to map out your debt if you need your debt mapped out. If you don't have any debt, amazing. Guess what? If you're going to use this for capital purchases, for cars, for homes, for pools, for other things, vacations, weddings, you can do that too. Or if you're going to go leverage your green men, because when you're wealthy already and you're practicing this, guess what? You're just going to become wealthier. And then you become the wealthiest, and you just keep growing and growing, because that's what some of the wealthiest families ever practice this. And then finally, you're going to outgrow this system, and you're going to be like the other banks, and you're going to have to open additional banks. And if you don't understand this yet, I want you to Google something for me. Again, I want you to check all this stuff out, and let's get it popping. Let's go and say that, let's look up together, go to Google right now, look up bank-owned life insurance and pop it in the chat. How many hits do you get? How many millions of hits do you get when you look at bank-owned life insurance? This is the #1 place that banks keep their money. They actually have more cash-rich whole life than all of their land, their property, and their buildings combined. That's really crazy if you think how many bank branches you have of Bank of America, Chase, Wells Fargo in your city, in your town, right? You have so much. And I guess really what a lot of people are thinking, maybe people are seeing this for the first time, you guys first are amazing, #1. Amazing. It's Thankful Thursday. I want to express gratitude because you guys right now are already doing what 95% of people will never do. You're investing in yourself. You're giving your time, your energy here. And why won't an advisor tell you this? Why won't the person that's been managing your money for maybe a few years, a few decades, has never mentioned this? And when they say, oh yeah, whole life is a great protection, it's a great legacy piece for your kids, let's just build it a regular old whole life way. Well, that's huge business for them. Why advisors won't tell you this is twofold. One, even though we call it specially engineered and simple whole life, there's a lot that goes into it. There's a lot that goes into meeting someone where they're at, designing it for them, understanding how to help them solve their first problem while retaining the thinking long term. Because why do we want to do that? Because this is a lifestyle. Don't get scared, don't run away. I'm not telling you that you can't eat sugar for the rest of your life, or you have to get up at 4 and work out every day. I'm saying if you want control, you want freedom, this is a lifestyle that you can adopt. You can do it where it's just a glorified savings account. You can do it where you have every dollar that you've ever made running through this thing eventually within a few years. You can do this where you go out and teach this to others. You pick where you're at today. But why advisors don't tell you this is because it's not profitable. It's the same reason why banks aren't telling you about this, why the government's not telling you, because we give up 60 to 70+%, as much as 90% of commissions for every single person we help. And you're thinking, why would you do that? Well, we know this is a numbers game. When I help someone, 91%, 9 out of 10, more than 9 out of 10 people come back and start additional policies because they realize that this too good to be true, this can't have my cake and eat it too, false narrative is something that is true. And we can go and help people start their second or third or fourth policy. I was spending time, like one of the guys on our team has 28 of these policies and he's been practicing for 15 years. I was with a guy practicing for 10 years with 30 policies because he's got a huge family and business partners and all kinds of insurable interests. It always goes back to the insurable interest. So I'm saying a lot here, but I just want you guys to know that it's really about you. It's about your journey, your wealth creation, and you can have as big as goals as you want. And I know if you're here, we all want the same thing. We want that security, that control. We want to know that no matter what happens with the economy, our money is safe. Our money is growing. Our money is growing tax-free, and the government's not walking in at some time and being like, hey man, great job growing that seed into a giant harvest, that 10,000 into millions. I want my cut. Go ahead, pay me. If you're thinking right now, well, that's really cool, Jason, that's a very high level, I still don't really get it, I want to know more, I want to see numbers, I want to see math, I want to see all the things, well, we have that available too. We break this down. We have hundreds of videos out there sharing this content. You can go learn more. You can email me and I'll give you more information. But if you're ready to start the application, if you're ready to learn how you can do this, well then you've got the 2 steps. You can either go and keep learning and wait till later, till one day, someday you're going to get to it, or you can do what you do to be successful, which is take action. Book a call with me. Here is in the chat for everyone, and I'll put it at the end of this video for you guys. But what questions do you have right now? If you're new here, like I said, keep learning. This is the first time you've seen this, keep learning. I'll keep giving more information. There's a much longer presentation you can watch. But the next thing is really seeing where you're at financially, creating a system for you, going through the application process, getting your policy funded once approved, and then having the implementation specialist hold your hand as you use this and see your money grow every single day for the rest of your life. Again, blessed to have all of you here. It's been a fun half hour, 31 minutes together. Let me know what questions you have. I'll hang out for a couple minutes unless you guys don't have any questions. But again, always super grateful, always super blessed to have all of you here learning with me. How can we disrupt financial literacy? How can we take back control of our money and do what? Become our own bank. Have a blessed rest of your day. See you guys again soon. Now that you've seen how you can BYOB, how you can become your own bank, privatize your banking system, take back control of your money from the government, from Wall Street, and from the evil empire, the banks, what's next? What's next is watch this video here. check it out and subscribe to the channel if you're new. Smash the like button and ring the little bell so it turns blue for you and you're alerted to new content. Again, as always, watch this next video, and if you want to know more, go ahead, go to my page and book a call with me, and I'll show you how you can step by step become your own bank. Have a blessed rest of your day.